Hello, today is the 3rd of May 2012. It is a Thursday. Let's start off within the daily chart within the silver price, and let's get a straight line. And we'll draw a trend line and connect the key points. It's a little too thick of a line, and that's so there's the significant resistance field, which wasn't tested the last two hits. It was a little short. As far as a parallel support level, this is the most perfect one. You connect the original low, which has two pierces and two perfect hits. Possibility on a level where it may continue to go further if it does continue to go down from here. I'm going to zoom in on this just a little bit, and what you have is a situation where you may not have as high of a chance of finding support like you did the first time that came in. So if you're ever looking to find a key level where it should change direction, really the secret is getting it on the first time and then only looking for first time occasions. That's if you're trying to just pick and choose on setups. The thing about a pattern of lower highs and lower lows is oftentimes resistance is going to be met where a significant support level was found. And this was no occasion now, so that the new support level is roughly right in around 3060 as that potential area. And why is that important to know? Well, if you come up and you hit it, then what's going to happen is you're going to start to do something on the shorter term trend to state, okay, we've came off of these highs, now what? And then you're going to state, okay, well, this is the low, this is a high. It's got to reach hold 61.8, so there'll be a number somewhere around here, and then you see a pattern like this, and all of a sudden now you're like, geez, this thing is not looking good, because it found a high where it was finally support, and it's not able to hold a short-term rally, that is. And so that's something to definitely look out for within the price action. Let's go quickly back to the daily chart before we go to the weekly time frame. If we look at potential resistance levels that we had, okay, so this was the one, we're pretty much there. Yeah, but maybe just a little bit here at the 28 and change mark. But it could very easily just have one of those classic moves where, boom, a dollar down in a 15-minute period or a 20-minute period. A lot of those wild things that have taken place so many times before that it would be a surprise if it was not to occur sometime later on. Let's now go back to the weekly chart now. And it's been about a year now. Today's the 3rd of May, so it's pretty much around the 1 year anniversary. And if we draw a trend line that connects these highs and then draw a parallel trend line to connect the significant support, then what we can see is that this is again an area where if we continue to go further, we may end up testing, which is now below 26. If we go to 26, it is the third time that it is going to have a test at that level. Obviously, if we're going to be looking at areas of concern on a lower high, probably up and around 30, and that's thinking going a long ways away, or at least by price wise, if of course something like this were to occur. I am going to zoom in on this manually. It's just going to look at the end of the chart, and this is what we got. So therefore, what we can see within this is, first you can just draw a trend line any way you wish. It's not a good thing when you break below this. That's why any type of quick moves that take us down even another dollar or so is going to create something fast, because when you have a situation like this and you break down a little bit below this trend line, enough where it's not just a small pierce, well, things are going wild, and one of two things usually occurs, which is usually further downside. In this case, you'd be looking at 26 to be an area where potential support may be found. And it also can be a washout situation where you have a lot of volatile spike move lower that brings a volatile spike higher, sort of like where you come down, when we came down to 26, then you just boom, go back up really fast. Something in that nature there. But breaking a support line, downtrend line like this to the downside is never a good thing on a bullish scenario. And then just looking at the last few candles and within here from this top, and you can see in here that it was the moving average was changing over, it was going higher, it established resistance, and it broke it. And therefore, that's the type of setups that you're looking for in a long opportunity. You always got to watch out for that possible failed move, and that's what brought us down. And I want to talk about that failed move in just a little bit of a moment. Now, you didn't know on this that it was going to be a failure because, quite frankly, it was as long as it held in this area, then it was fine, and it didn't do that. It obviously continued to go lower. So you have 1, 2, 3, 4 candles going sideways as this moving averages, and then in here it broke down below, but it gave a fairly bullish scenario, and it ended up actually just finding resistance as we take a look at this at this former level of support. That's what we can see from this because the market went down and back up. So because of that, and it continued to go lower, it's really bringing you the bearish setups now rather than the bullish ones that were coming into play. Again, if it doesn't go lower much more, or it does that failed move that I talk about where it goes below here and then just rallies up higher, then you would notice that of a failed move breaking down. And if you see price action starting to go higher, you may want to think that it's not up too much short term at that point, because failed moves can create fast moves, and determining how fast they're going to be, well, can oftentimes be a very difficult challenge. So I'll bring this back into the regular zoom. So again, $30 support level is a situation where you had a 61.8% support, and it ended up bouncing from this level. I probably didn't. I would have been stating that one thing you want to be wary of is that it doesn't find resistance at this level and starts to go lower, because that would be the bearish situation as I referred to on the daily chart, that is. Finally, we got these bands. They're not Bollinger Bands, but they're designed in a very similar way. And I think the Bollinger Bands probably be doing the same thing. But when they're in a situation where the lower trend is going higher and the upper trend is going lower like this, like just squeezing in within the price action, then that again can be the warning sign that we're ready to have some sort of big move, whether it be that of a bottom reversal and a new pattern of higher highs, or the fast moves that can bring us down to 26, and therefore that would be that. Finally, again, I just said that before, but just want to go over this again. The duration of this move was from 1774 to 51, so basically 3 times its value. And the duration within what we've been seeing so far in here has been much longer thus far. So because it's been in this downward trend for some time, it's going to change over and it's going to move higher. It's like a chess match or any type of game where one team has a turn, the other team has a turn. And what they do within those turns, well, that's what the game is all about. So when the Bulls had their turn, they had their turn from here to here, and their game was 3 times. So far, the Bears had their turn, which is at least went from here to here, and they got basically 2 times, because you go from 26 to 49, that's like 1.8, or it only got 61.8% of the length that the rally, of course, came into play with. And therefore, when the Bulls take over, then it's going to be a point A to point B from some point. So when that happens, it's tough to say. When I'm really noticing that a lot of these silver bulls are getting very either neutral, bearish, I don't know, and all this stuff is going on, that's usually or historically been a good time to go long. And I'm seeing a lot of signs within that as well. And my long-term game is within playing the physical commodity because I know the manipulation in the market is set up to not have a fair price. My research has shown that it is way not overbought, basically, or it can go a lot more higher priced than other real assets, and especially holding over a fiat cash system just to me makes a lot of sense. And in situations where moves get lower, that means you buy a little bit here, but at the same point you realize that there could be those fast moves, and then you can try to get in and see what you can buy within this level. But it'd be interesting if, of course, it does go down to this lower level, how the physical would play out, because for a while I've been stating that it would be a major disconnect if it did go anywhere within this area. Thank you for tuning into this almost 11-minute video, and have yourself a great day. Bye-bye.